Traders, the US dollar is the backbone of these global markets. If the US dollar trades to nothing, okay, if it's trading at some shit level, then what is it worth to these other economies that hold trillions of dollars of US debt? It's a big deal. Let's roll the intro. Traders, welcome back to another high impact, the best place to learn fundamental analysis and to use that analysis, use that data to your advantage to give you a better trading edge. I'm Cleveland Bishop, and guys, I want to talk to you guys about this US dollar slide, okay? I don't want to go too far off. I want to talk about the Aussie, okay? I don't want to talk about the potential quantitative easing slowdown happening in the EU. We have to talk about this US dollar. What you guys need to understand is the US dollar is the backbone, okay? The petrodollar, all right? This is the largest reserve currency in the entire world. And the fact that it is falling off a cliff means a lot more than, hey, US dollar sells, let's buy into the Euro U, let's sell the US CAD. There are real world effects that are happening, and I want to help you guys understand what's going on, all right? So again, make sure you guys are subscribed just so that you can be updated as I keep cranking out on these high impact videos, okay? Because this stuff, it happens real fast. We're at record volatility in 2018. I said last year that we were at record volatility, and it's even more, okay? Just look at your charts. We're gonna be going over the S&P 500 a little bit later on, so guys, make sure you stick around. And also, right, you seem like a pretty smart individual. You're trying to get up on your fundamental analysis game. That's real smart. What you also need to do, okay, just for me, is like the video for your boy, okay? I appreciate it. Guys, look, this is what's going on, okay? We got this US dollar completely falling out of the sky. Here's your dollar index. We've been talking about the dollar index for 7, 8, 9 months, but we're gonna stop talking about the dollar index so much, all right? And we're gonna pull over a bit, okay? The dollar index is just the dollar index. I don't say just, it's a massive index, but we need to understand exactly what's going on. Let's kind of price in a bit and see exactly why this market has fell the way it has, all right? And then outside of that, what are the variables, okay? What are the effects of seeing a dollar slide like this? And what happens with those effects? What kind of cataclysms, could happen when the largest reserve currency in the world starts to hemorrhage? All right, so let's do this real quick. Let's price in, okay, let's price in this US dollar. First things first, when we price in this US dollar from, let's go Q2 2017 to Q4 2017, okay? Well, Q2 2017, that was very important. Q2 2017 was when Draghi started mentioning that he was gonna start the quantitative easing program, slowing down the quantitative easing program, all right? That means he was gonna stop printing money, okay? We've already talked about QE. Go head back and watch some of the older high impact videos. You'll get a complete breakdown of what quantitative easing is, but that was something that he initiated in terms of just a spiel, okay? He jawboned, all right, that he was gonna actually stop the printing money process slowly but surely, okay? Right now, remember, they're doing $60 billion in printing a year from their treasury. They want to slow it down to 50, 45, so on and so forth. Once he said that, look at the parabolic move that these markets gave, okay? And you saw that correlate over in the dollar index, all right? So since we saw the dollar index pull back, that doesn't mean the US dollar lost strength. All that means is the US dollar lost strength relative to the euro. Now, why was there such a large effect in terms of the dollar pulling back when Draghi mentioned that? Well, that's just because the dollar index is weighed almost 60% based off of the euro area, okay? That's an enormous economic, conglomerate, okay? So the dollar index is weighed probably around 60%, and then the rest, you have the GDP, you also have the Aussie, the Japanese yen, the Swiss franc, all these other different currencies, all pegged into that one basket, but the euro is enormous. So that was our first initial slide, okay? And then you also had things like the Michael Flynn situation that started happening back in February, but then you started to get the Russian allegations, and then slowly but surely, Trump took some time, okay? He took some time to pass a lot of regulations that we once priced into the market, okay? Infrastructure bill, tax bill, healthcare reform, all these things could really loosen up a lot of capital in our markets, and he wasn't getting that job done. So you saw a lot of that value in terms of the pricing in of that dollar, pricing in of that stuff happening, leave out of the market, okay? People started to pull back on those positions. All right. Another thing I didn't mention that made markets go parabolic in 2017 was the Marine Le Pen and Macron election. The fact that Macron won, again, priced out a lot of uncertainty. Remember, Marine Le Pen was talking about leaving the European Union. France is the third largest economy in the entire European Union. Okay, what happens when all that money gets outside of the euro? Obviously, you're gonna lose purchasing power. You're gonna lose the wealth that is circulating within that conglomerate, right? So Macron said, "Hey, look, I don't want to leave the euro. Let's stay in." Boom! You had a massive gap when that happened, and subsequently, month after month after that, you just saw even more liquidation come on in. You had Trump mention within that time. We're now over in Q3. Let's screenshot Q3 here. You had Trump mentioning around this time that basically, "Hey, look, I want a weaker dollar. Weaker dollars are good for trade," something he did just mention about a week or so ago. Again, that threw the market outside of different structural highs, all the way running us back up into the $1.18s. All right, once we got to the $1.18s, we were getting towards Q4. All right, December, November, October, right? And those were the months where a real decision had to be made on whether Draghi wanted the market to keep pushing to these new highs. Okay, we have markets trading at $1.19, close to $1.20. Do we keep markets pushing to these highs? Is it okay for the euro to strengthen in value over 6-7% in just 2 quarters? Probably not. So you had a little bit of weakness come in on that euro-U, and conversely, you had some good readings, CPI, you had some good NFP readings, you had a good average hourly earnings. I'm talking about right now, September and October. You guys notice here, those months in that quarter was where you saw a little bit of strength come back in on that euro-U, and conversely, if I show you now the dollar index, you see the same thing, September and October, okay? Look, euro and the dollar index, both September and October, you see how well this thing is correlated, all right? So eventually we couldn't sustain, okay? We couldn't sustain. We actually started to head back. We had inflation tick down a bit, all right? Those next few months, I think it was November, we had an inflation tick down. NFP, I think we ended up doing negative 33,000 jobs, and you saw again a little bit more liquidation of that US dollar. And then by December, by really the end of December for the euro-U, got started a little bit earlier on some of our other pairs. Here's the Aussie, for example. You can see Aussie started a little bit earlier in terms of that US dollar just being liquidated, somewhat followed gold a bit, but you saw just a massive bull move and a massive break of a very large 3-year structural low that was formed on the dollar index, okay? And so what is happening right now? Why is this happening, all right? Why are we seeing such a massive liquidation of the dollar? We raised rates 3 times last year. Okay, you usually expect a positive correlation when you have a rate raise, right? That's what everyone in Forex talks about. Oh, if they raise rates, we're gonna, the currency's gonna get stronger. That has not been the case. What is going on? Okay, well look, right now you have a couple of things happening. You have the Fed with an ideology of, hey look, we are expecting more inflation. Okay, the fact that we're expecting more inflation means we have to raise rates. If you guys don't have an idea of the correlation between inflation and rates, you got to go back and watch one of the other high impact videos. We talk about that there as well. Okay, so you have the Fed correlating those aspects of monetary policy there. But then you have also Donald Trump right now speaking on, hey, I want US first. Okay, US first would mean that we need a weaker dollar. All right, think of it like this. If the US is basically isolating themselves, okay, getting out of the Trans-Pacific Partnership, saying that the NAFTA is bullshit or whatever the hell he's got going on. Look, if you start to isolate yourself, you can't have a strong currency. Okay, think of it like this. Let's say those firms and those companies inside of the United States are exporting billions and billions, trillions of dollars of goods and services out of the United States. If the US currency is strong, then guess what? Those companies are going to be competed. But if the US lowers their prices, then what happens? Immediately, they become a lot more attractive, and you start to get a lot more growth and a lot more, and a lot higher increase in terms of market cap to those firms, all right? And so that's why you want to have a weaker currency. Steven Mnuchin said it, I think on Thursday, he mentioned that, hey, a lower currency is good for trade. Okay, Steven Mnuchin was the guy that was holding up the massive sheet of money, and his girlfriend looked like Velma with the Dalmatians or whatever. Look, he mentioned, hey, we want good trade, we want a lot of trade happening, we have to have a lower dollar. Right now is a massive catalyst to have the US dollar break an even further low, getting us down to all-time lows, having us sit right around this 61.8% Fibonacci retracement here on this dollar index. So again, we talked about why this market is where it is, okay? We have a little bit of counterparty risk happening with the euro, but we have a lot of weak dollar policy happening with the United States and the administration, okay? But what are the effects of this weak dollar? Here's the deal. The US, we're in a lot of debt, okay? Our debt to GDP is one of the worst in the entire developed economies. And what that means is basically we owe a lot of money to foreign governments. All right, so this might get a little complex, but I want you to bear with me here, and I might not be able to break it all down in this video, so make sure you subscribe. We're gonna keep breaking this stuff down, and I'm putting out a video every day this week, somewhat around these subjects, okay? So again, the US dollar, right now we owe a lot of debt, and our debt to GDP is massive. Basically, that means the amount of production we do is not equal to the amount of debt that we have to make that production possible, okay? Same thing like if you were to go into debt to get a house, you didn't produce enough income, so you had to borrow money to get the house. That's exactly what's happening here in the United States, okay? Those debt holders, China, Japan, okay, these Asian economies and some of these European economies, we owe them a lot of cash. And as this US dollar keeps devaluing, they hold US assets. They hold liabilities in terms of US assets. They are getting paid interest rates, but they're getting paid interest rates in US dollar denominations. Okay, it is very dangerous for the backbone of the entire globalized market structure to become worthless. Okay, and the fact that the fiat money ideology is that obvious to where you can just devalue the strongest asset, right, that all of these economies depend on, that the trade of petroleum depends on, when it can just become worth absolutely nothing and devalue over 20%, okay, close to 20% in the span, again, of just really months. Folks, that's a big deal. Let me put it to you this way. We saw the Euro-U at 104, okay? It was at 104 somewhat around December, January, in the beginning of 2017. We hit a high of 125, all right, guys? That is a 21-cent run, okay? So what just happened was the economies outside of the US that buy US products at one point, some of them were paying $1.04, okay? They had to convert from $1.04. We're talking about the euro, obviously. And now, think about it, guys. You're getting a 21% discount on those same goods. That is why these US companies are doing so well, and that is why you have the stock market at all-time highs, okay? They're getting a 21% discount. These people were buying billions and billions and billions of dollars worth of product. They're saving billions and billions and billions of dollars. 21% is like a Black Friday sale to some of these larger economies, okay? So again, that's absolutely massive. But what starts to happen is bubbles start to form. What this dollar weakness is also affecting is emerging markets, right? We saw a 22% increase in emerging market stock markets over 2017. Okay, so India, okay, you have Malaysia, you have, again, some of the smaller, again, emerging markets, Brazil, okay, think of anything outside of the currency pairs that you can probably trade. Those are emerging markets. Most of the things in South Korea, countries in South Korea, most of the countries inside of Africa, again, the less developed Asian economies, a lot of those stock markets did really, really good. Why is that the case? Again, guys, they had a 21% discount on their money at one point when trading their capital back and forth with the United States. All right, that's absolutely massive. So what could happen? You could have bubbles start to form. Okay, you could have so much buying happening in those cases that bubbles start to form in these emerging markets, and it's harder to spot emerging market bubbles because you just don't understand those economic systems as much. Right? Those bubbles start to form, you could start to have collapses, and folks, you might think, okay, well, those are smaller economies, so what? Malaysia stock market collapses. There is a ripple effect in all these markets, folks. That is the thing about a global market. One little bank out of the 41 banks that really control this entire infrastructure and, you know, this flow of cash, if one of those banks failed, it's been shown that they're all too big to fail, okay? It would literally have a ripple effect and go all the way to Deutsche Bank, and then the entire market, would just absolutely explode. Okay, Deutsche Bank is, I think, at one point that was 40% of the Forex trading volume. Okay, a lot of money goes in and out of Deutsche Bank. So again, that is absolutely massive. So what am I saying all this for, right? Why am I throwing all these facts out here? Well, I'm saying that because eventually there's going to be an inflection point, a point at which the dollar can't get weaker anymore until something happens. Okay, and usually that something isn't so positive. Okay, we know what market cycles are. We know market cycles happen when we have bull moves and bear moves, bull moves and bear moves and whatnot. Look at the S&P 500. Okay, we're bringing it back up. Folks, I really want you to stare at this bad boy, and I'm gonna try to get the dimensions just right. Not to over exaggerate it too much, but to show you how long of a bull move this is right now. Okay, and usually you do see a correlation, right? You usually do see a correlation with the stock market increasing in value and the dollar decreasing in value, and it makes logical sense. We just mentioned why that is the case, but sometimes you don't. In those times, it is somewhat randomized. There isn't a 100% correlation, not even 80%. I think it's anywhere from 50 to 70% correlation when it comes to the dollar index in the S&P 500. But nevertheless, folks, when you have economic expansion, it is oftentimes that you also see a weaker dollar. When you see an economy collapsing, like the US economy collapsing, you will oftentimes see the US dollar surge in value, because no matter what happens, okay, this is just the way it is. Right now, the Federal Reserve, they have never defaulted on any of their bonds, okay? Go to Puerto Rico. Puerto Rico just went through bankruptcy, right? I know Puerto Rico is a state of the US, but that is an example of, a smaller economy defaulting on their bonds. Go to Venezuela, go to Zimbabwe. These are larger economies that, again, defaulted on their bonds. People put capital in and trusted the government that capital was going to be repatriated back to them, after 5 years, 10 years, 30 years, or whatever. Boom, zero, goes to nothing, your money is gone. The United States has never done that. Okay, so you're almost guaranteed to get your money back. So when economies start collapsing, when emerging markets start collapsing, when Asian economies start collapsing, where's all the money gonna go? Where's the safest place? Gold, right? Maybe Bitcoin this time around, okay? And that US dollar. You will usually see a spike back in that US dollar. The second we start to see a sign that the US dollar is getting stronger, I'm certain that we also are going to be seeing signs of the stock market getting weaker and emerging markets getting weaker as well, okay, based off of maybe different bubbles that are happening. One more thing that I want to mention though about this US dollar getting weaker that an analyst pointed out that I thought was a very interesting ideology behind the US dollar getting weaker, a bad thing. Think of it like this. If the US dollar is getting weaker and we're pushing and pushing and pushing out all these exports, eventually what happens, right? Eventually you might start to have the product of those exports lessening, right? If we see that we're just making tons and tons and tons of money, you might start to see a little bit of cockiness coming from these US firms, okay? If you think about the exports coming from China right now, they're not the most quality, but they are the most mass produced, okay? Everything is coming out from China. So again, when you buy Chinese goods, they're not the most quality goods, but you know you're gonna get something fairly cheap. Well, right now, when you buy from the US, again, you're gonna be paying a premium, but you're gonna be getting the best, okay? Well, I think that as we devalue our currency, I don't know if that standard is going to be there. I don't know if America is just that awesome and we crank out things like Amazon and Apple and all these massive companies. I don't think those companies are existing because of the American dream. Yes, granted, I think in terms of a society, we are very free and free thinking and allowing people to have that entrepreneurial spirit. But remember, folks, if we lessen our purchasing power and it's harder for us to make money and do business outside of the United States, you might start to get a different reaction. You might start to form a different ideology behind, again, starting a business, getting out there, doing the best you can, making the best products in the world. What I'm saying is, if the US dollar gets so weak that we can just export anything and it'll sell, will we start putting ourselves in a situation where the products that we're exporting aren't as quality? And when that recession hits, what's going to happen? Recession hits, US dollar, the US economy goes into a collapse, and then at that point, now we aren't as competitive, right? Because we downgraded the product because we were just throwing it out there. Okay, we were the most profitable, but not the best. Okay, but now that the recession has happened, we aren't going to be the most profitable anymore, and we're not going to be the best. So that gives a chance for other economies to start, again, improving and potentially becoming that backbone of society, that backbone of this business structure. It's a very interesting concept. I think it makes a little bit of sense. I'm going to look a little bit more into it, but I want to know your opinion on these things, guys. Comment below. Let me know what you think. I am very, very interested, but more than anything, I'm really interested to see this inflection point, okay? I'm really interested to see, over the next few months and maybe a year if it goes out that far, what is going to cause this US dollar to have that 10% return back up into structure, to see this US dollar back down at $1.14, back down at $1.10. I think it's gonna happen. Now, will we get to $1.30 before then? I think so as well. Okay, I don't think we're anywhere near close to being done with the dollar slide, but eventually it has to turn around. The central bank and the administration are gonna do everything they can to try to save face, but I think it's gonna be a little bit too late. But as a trader, we can catch both moves, right? We can catch that up move all the way up into $1.30, $1.40, wherever the euro goes. We can catch the down move from them raising rates and all these different policy formations on the way back down. It's a pretty interesting concept. Lots of other factors are coming into play right now as this dollar is declining. You guys need to make sure you're taking them all into account and looking at this market as a Forex trader would, a foreign exchange trader would, right? Looking at the economies and saying, okay, how are these effects of these different currencies, how are these going to be affecting these actual economies? Because then that's going to give me even more data, and that's going to give me even more information on how to make better trading decisions. Okay, so guys, look, your profits, always my motive. If you guys got any questions, let me know. There's a link down in the description below to join our trading community. Hope you guys the best. I'm gonna see you guys tomorrow. See what we get, man. Peace.